Good evening and welcome to an Easter edition of Fireside Chat. Hope everybody had a very happy Easter and is enjoying Passover, enjoying the spring. I wanted to talk this evening about what's known as the Stockdale Paradox. And for some of you who don't know, I went to the Naval Academy and had a professor named Admiral Lawrence who spent 6 years in the Vietnam prisoner of war camp with Admiral Stockdale, who was in the prisoner of war camp for 7 years, one of the first to go into Vietnam and one of the last to come out. And it was, whenever I think of things being difficult, I always think of what these men went through, and just remarkable the torture and stress they were put under for year after year after year, in which so many times I know that I'm sure that they were at their wits' end. And lost hope. But Admiral Stockdale talked about the paradox being that you can't lose hope in the future. But also the paradox being that you have to confront the reality of what you were going through wholeheartedly. And he said, when asked one time who didn't make it through the Vietnam prisoner of war camp, he said, well, that's easy. He said, it's the optimists. He said, because the optimists would always hope for that by Christmas time they would be out and Christmas would come and then Christmas would go, and then Easter would come and Easter would go, and then Thanksgiving, and then Christmas again, and they would die of a broken heart. And even at survival school, they always taught us to make sure, and you've probably heard this when people have been stuck out on rafts for weeks on an end in the middle of nowhere, that keeping hope and faith with your fellow people who you're going through it with is very important. And now we have that camaraderie, of course, of all of us being cloistered up in our homes and going through these difficult times together and hoping for a better day. But also it's important to confront the reality. And the reality right now is difficult as the economic numbers are coming out. We have effectively, when you look at it, about 30 million people who are employed in the industries that are the most affected. These are the hotels and tourism and entertainment, restaurant and bars and retail, minus the food stores. And we've already had 16, 17 million people who have been laid off. And this is having a dramatic impact on our economy. It's going to have a dramatic impact on our GDP, our gross domestic product, which is going to lead to certainly a negative growth for the next quarter, possibly two, maybe even longer. And of course, with unemployment well over 10, 11, 12%, we're not sure how high it's going to go. And as help gets to them for the government and all the industries that are impacted, this is going to have a terribly negative impact on the economy. And don't think this is going to be a quick start. I've talked a lot about how this is probably going to be a U-shaped economic recovery. It could be V-shaped for the stock market. We don't know yet. But it's going to take time to work through these issues. It's not like we can just turn a light switch and things go back. I know I talked a lot about models and don't putting much emphasis on them because nobody knows. Whether it's the Gates model, McKinsey model, Cornell University, or the CDC, they were all wrong in the sense, especially the worst case scenarios where we were talked about losing 1 million people or 2 million people. Even the estimates from as much as a week ago from the government, we're talking about 100,000 to 200, 250,000 people succumbing to the coronavirus. And that hasn't been the case, and it's certainly not going to be the case now that we're talking about estimates of 60,000. And again, we don't know. Models are just models. They're frail and really smart people, just like with the stock market and all the mathematical algorithms that drive the markets up and drive the markets lower. I have clients email me saying, oh, it's only the Wall Street guys making money in this market. They're not. And you see that with the returns of the hedge funds in that they are very poor and impacted by these fits and starts also. And that's why it's important to be a long-term investor. So you're going to hear plenty of pundits, economic and health experts who get on there telling you this is going to be a V-shaped economy or U-shaped or Y-shaped or W-shaped or whatever letter they want to come up with. Nobody knows. And that's part of the reality of the uncertainty of investing, like we used to call in the Marine Corps, the fog of war. And it's just a difficult situation to work through. And that's where you have to hope, right? But we also have to be pragmatic, and we know that the earnings season is going to be terrible as the earnings for a lot of companies come out. It doesn't really matter what company it is. It could be a Starbucks or a McDonald's, and you're going to see earnings certainly hurt and cut by 10, 20, possibly 30%, with no guidance going forward for the companies because they just don't know how we're going to go back to work. At some point, however, the market will start to look forward. I know the rally the past week was buoyed a lot of spirits, and people feel like, oh, okay, we're done and we're out. Probably not. Well, we could very well retest the lows again, and this could be a pattern where we go back and forth for quite some time, which again is why I like dividends, right? Our focus is to keep the income stream there for you so that we can weather these inevitable storms, much like we weathered the storms during the dot-com bubble and during the financial crisis when we went through the Great Recession, where our clients kept their income streams steady. And that's an important thing to think about. The American consumer is certainly in much better shape going into this than we were going into other recessions. However, most people, 80% of people don't have the wherewithal to last a month or two without help. The good news is that the Federal Reserve and the U.S. government, Congress have come together to push through tremendous packages to help people weather the storm, and will continue to do so with next phases of help. There's going to be a lot of debate. The PPP, the Paycheck program, which is going through for a lot of businesses, is having some issues. It's had issues with our business too. Smaller community banks who know their customers, or we work with PNC, we still haven't gotten the loan yet. We're certainly in a situation where we can withstand that for some time and don't need it immediately, and can take time and eventually get that loan. Other businesses, this will cause a struggle, and a lot of industries are not going to come out of this recession or this forced shutdown without a bankruptcy. That's just going to be the reality of what's happening. It's also going to be the reality of some of the businesses that we invest in. We always know when we go through recessions that the companies that we own, some of them, we're going to go bankrupt. How much? That's a big question, and we don't know exactly how many this time. That's what's keeping me up at night right now, and trying to decide which companies to continue to own, which companies should we let go at cents on the dollar, whether it's 50 cents or 20 cents on the dollar. These are the difficult decisions that you're always making when you're investing, and there's never a green light that says go or a red light that says exit. If it were simple, then everybody would make money, and that's certainly not the case. So when you look at unemployment numbers at these levels, when you look at GDP, when you look at the American consumer in better shape, there's going to be a lot of debate too whether or not when we should restart the economy. I think it's important that we kind of be kind here to one another. People are already trying to do after action reports, and there's lots of blame. I was at the park today, and usually Democrats are more of the caring society, care more about the community, live closer to cities, understanding the need for cooperation amongst people. But I saw a lot of people today at the park, some of my liberal friends, kids playing with other kids, and I was thinking, oh, that's against the governor's order. But, that's more usually where the Republicans are more about liberty and being able to do what they want. And everybody's going to work through these issues the best that they can and do what they feel is best for their families, for their mental health, for their financial health. And I think this is where we have to understand that people are going to see these issues differently. Certainly Democratic governors have locked down more quickly, and that makes sense, again, being more from that caring tribe. And Republican governors and states where there's more wide open spaces have certainly leaned more towards the liberty side. And there's going to be, again, a lot of fighting. And states will certainly shut down and open up at different intervals. And that's okay. However, as we get antibody tests and more testing done and younger people going back to work, and it'll come in fits and starts, and we're not going to get this perfect. But that's okay. Again, at some point, the stock market will start to look forward. We will start to recover and realize that, as I've said in previous Fireside chats, that this isn't a black plague. We're very fortunate to have had as few people die as we have, but there's going to be tens of thousands more that are going to succumb to this illness. And though every life is precious, there's going to be also a balance between getting people back to work so that we don't lose other lives to other illnesses. It's already been worse in the New York area, and we've already had two of my daughter's best friends get the illness. One of my friend's fathers has now passed away from the coronavirus, and we're all going to know somebody much like people in 9/11 when that happened. But we all have personal tragedies in our lives too, which happen, whether it's cancer at a much greater frequency, or heart disease, or any other thing that we succumb to in life. And I think we have to put all of this in context, that we will come through this. And again, not losing that hope, that Stockdale Paradox of confronting the true harsh reality of what we're going through, but also understanding that it will get better in the end, and we shouldn't panic and go to cash and have that feeling of wanting to do that at times. Again, the Federal Reserve has stepped in with tremendous action, including buying municipal bonds now, which is very different than anything they've done in the past, corporate bonds, and even high yield bonds. Now again, just because the price of those high yield bonds has gone up doesn't mean that they're not going to default. The Federal Reserve can certainly lose money on some of these things that they're buying. I know a lot of people, and I was on a call with a senator this week and a lot of small business owners, and this was with a more conservative senator and a conservative group of individuals, were saying, we shouldn't be bailing out a lot of these institutions, and that could be true. However, again, as I put the blog out last week about our national debt, there's a lot of debate, and certainly right now, as I said on the call to the senator, this was Senator Hawley of Missouri, I said, we're all Keynesians right now. We can go back and debate the other issues of entitlements and getting our debt back and finding the right debt level. But right now, I was thankful for what the Senate did, both Democrats and Republicans, to help the economy. And I was thankful with the speed at which they did it. It wasn't perfect. Certainly, there are things getting thrown in, and that's what's causing this next phase to be held up, as there's going to be disputes between Democrats and Republicans. And again, that's okay. That's understanding that the other side are acting as patriots, as they believe to, for their own constituents, and there's going to be disagreement. But in times of crisis, usually government comes together. And as we work through this, certainly individuals, corporations, and states are going to need more help. And I would kind of go easy on us on those instances, and there'll be time for after actions later. Kind of like I write about in my book, where I talk about some of the issues and things we did well during the financial crisis, and those things which we didn't do as well, and that caused us this problem. And that's one of the benefits of this, is that the banks are in a lot better shape. Now, they won't be for long if this drags on. We've already seen European banks suspend their dividends. Whether or not that happens here in the United States, we don't know yet. Jamie Dimon actually mentioned we could consider it in the future of JP Morgan. He's one of the few who actually brought that up. Most businesses will just say, we're not going to cut the dividend, and they cut the dividend. Jamie Dimon, again, using the Stockdale Paradox, is hopeful for the future, saying things look okay and they're starting to improve, or starting to flatten the curve a little bit, but also understands if it drags on, that may be something that they have to do. And great leaders do just that. They talk about the reality that's confronting them, and let's work at the best plan we can as we're going, understanding it's not going to be a perfect plan. There's no such thing. So I think that, again, value should lead. I've been talking about how growth stocks have been outperforming value now. It's been confounding for years and years, and everybody wanted to buy these crazy, astronomically priced stocks that don't pay dividends. It's never made sense to me, but we've been through this before. Happened during the late 60s with the Nifty 50. Happened during the dot-com bubble. Again, we didn't buy those kind of stocks then, and we're certainly not going to buy them now. Normally, value leads the way out of recessions. Normally, people start to look for quality companies that are selling at reasonable values that also pay dividends. And I think that'll be the trend again this time, is that people will look for companies that are selling at reasonable valuations for the types of stocks that we like to buy. Same is true for high-quality bonds. I'm just not going to be able to get any return from you by putting you in a U.S. Treasury yielding zero. So I'm certainly not going to do so. We're going to continue to look for companies like we bought last week with Conagra and Keurig Dr. Pepper, at 5.7% yields. Well, those opportunities are gone now because the Fed moved into those. So now we're looking at industries that may not be as impacted on the high yield category. That, of course, consumer discretionary will be, because we're not sure on the retail side which companies are going to make it and which aren't as we get back to work. And then the energy sector, which has been obviously decimated with a 1-2 punch of this demand destruction for oil, as nobody is using it, whether it's airplanes, boats, or cars. And then also the price war that went on between Saudi Arabia and Russia, which seems to be alleviated at this point, but who knows? We're not really sure yet if they'll actually curtail the supply side. So with spring now starting to poke its head out here in the New York City area, it's nice to see these green shoots. We're starting to get some healthcare green shoots, and again, this crisis will have to lead from a healthcare side. And when you see that there's hope, and I think it's a mathematical issue to me, a science issue, that we'll be able to find a vaccine. And that we're going to find, we're going to be able to get broader antibody tests out there and testing done for the coronavirus. That leads that we're going to be able to get started here pretty soon. Again, plenty of debate. Governor Murphy in New Jersey is talking about the end of May. Other governors could be in a week or two. In other parts of the country that are more rural. And in this debate is even happening amongst the same party. Just this week, or just yesterday, or Friday, I believe it was, where we had the mayor of New York City, de Blasio, say all schools are shut down for the year, and Democratic Governor Cuomo saying, no, I make that decision. So this debate is going to go on amongst all parties. So in this type of circumstance, let's be kind to one another and understand that there's no completely right or wrong answer here yet, and we won't know until after the fact. So I always talk about at the end of this how quickly things are gonna. People always want to know when we're gonna get back and when's the market gonna recover, and my answer is always I don't know. What I do know is that I still will hope for better days ahead. I'm certain that the market and the economy will recover. I just don't know when. And in that sense, we'll continue to hope, but confront the realities that we're facing square on. As always, I appreciate all the trust that you've put in us. And please don't hesitate to call us anytime that you have a question about your personal portfolio, or about our strategy, or about our economic outlook. Thank you, and have a happy Easter, after Easter week, and Passover, and a wonderful spring. And we'll talk again soon. Thank you.